All right, everybody, welcome to the very first episode of the Beginner Education series, where we are going to be going over everything that covers the basics of trading and what you need to know before you really get into it. So, today we are going to be covering market basics, which obviously, as it sounds, are just the absolute basics of the market, what you need to know before you get any step into trading. Because if you don't know these things, you can't trade. So, what we're going to be covering today are candlesticks, how they work, market structure, and time and news. Super, super important stuff. So, first, we're going to start with candlesticks, right? So, when you first open up TradingView or, any other chart that you see, your chart's going to look pretty similar to this. So, when you first open up TradingView, your chart will look like that with basic green and red candlesticks. If you haven't already, make sure to download TradingView and grab the Essentials plan. That is the one thing you need to follow along and get everything set up properly. You don't need TradingView anymore, especially with, all these firms that are like partnering with like Project X, like Top Step X or Alpha Ticks, et cetera, et cetera. But I trade on TradingView. I like it. Um, One thing you'll notice throughout my videos is I maintain a very specific candlestick chart colors, which are as follows. My bullish candles are this cream color, and then my bearish candles are this brown color. You might be wondering why I don't just use the typical red and green for my chart colors. Well, studies have shown that the red and green can actually have negative psychological effects when you're trading. That's why I've changed mine. Obviously, if you're in a long and you're seeing a bunch of green and profit and whatever flash all over your screen, and then you see a red candle, it's going to negatively affect you because green and red negatively affect your psychology in a good or a bad way. So you want to veer away from that. I don't recommend trading with green and red chart colors. You don't have to trade with my chart colors. I like them. Pick your own, whatever you like. It doesn't matter. I personally prefer this color scheme, and all the charts you'll see from me, including examples I make, any videos, trade recaps, etc., will follow the same style. So take some time, get familiar with it. If you want your charts to match mine, I've printed all of my exact color settings in my Discord in the main updates tab under the pinned messages. So feel free to go there and copy me if you would like to do so. Um, Candlestick anatomy. So basically the core of a candlestick. What this is what a candlestick is. You have two different types of candlesticks. You're either going to have a up candlestick or a bullish or buy candlestick, which would be this cream color right here. And you're going to have a down, bearish, or sell candlestick, which would be this brown color. This would typically be a green candle, and this would typically be a red candle. Remember this. The body tells you exactly where the candle opened and closed, and the wicks tell you where the candle actually went. So let's say this is a 1 minute candle, for example. You can see the 1 minute candle opened here on a buy candle, and it closed here. But within this 1 minute, it dropped down to here, went up to here, but this is where it opened and this is where it closed. On a bearish scenario, the open is going to be at the top of the candlestick because the candlestick went downwards. So that means opened right here, we went up to this point, closed right here, and we went down to this point. This is also something that you'll hear as open, high, low, close on like a daily time frame. You've got your open, your high, your low, and your close. Open, high, low, close. So, bullish candlestick, usually green. I have them as this cream color. Red candlestick, dark brown. Sorry. Bearish candlestick, this would usually be a red candle. I have them dark brown. So, back into open, high, low, close. Let me move this out of the way. We'll just put it right here. So this is your bullish open, high, low, close. You can see open, low, high, close. And then obviously it's flipped for a bear scenario. We have our open, high, low, close because it's going downwards. So we close down here, and this is candle is going upwards. So we close up here. So let's talk about open, high, low, close. For a buy or the cream candle, Open is always at the bottom of the body. For a sell candle, the open is always at the top of the body. In simple terms, if the candle closes above the open, it's a bullish candle. If the candle closes below the open, it is a bearish candle. Each candle is made up of 4 key points no matter the time frame: an open, high, low, and a close. It's OHLC. That is all you need to fully understand what price did during that candle's time frame. So there is an open, high, low, close on any 1 minute, 2 minute, 3 minute, 5 minute, 30 minute, 1 hour, daily. There's always going to be an open, high, low, close, because if you don't have an open, high, a low, and a close, you don't have a candlestick. So that's kind of how it is. So again, right here, so we'll just go on the hourly, for example. You can see right here, this hourly candle is what we will use. We have our open right here. Well, that's not a good example because we don't have a wick. So we will use this 15-minute candle is perfect for a bearish example. We have our open right here at the top, our high, which is the highest point that this candle traded to. We have our close, which is where the candle closed, and then we have our low, which is the lowest point the candle traded to. Super, super simple stuff. Like this is as simple as trading gets. So if you can't understand this, maybe you should look for something different to do. Now we are going to get into market structure. Market structure. Okay. Market structure is the foundation of all ICT concepts. We're going to break down bullish market structure and bearish market structure. More importantly, how to identify them on your chart, and understanding this is very, very crucial before anything else. So let's go ahead and dive into it. And this is what bullish and bearish market structure is. It's bullish, low, high, higher, low, higher, high. And the bearish is high, low, lower, high, and lower, low. Obviously, you got our bullish market structure here. We've got our low. We make a high. We make a higher low, as in this right here doesn't take this out and then create bearish market structure. We continue go up. We continue to go up and create more higher lows. So lows that are just higher, dips down that are higher that don't take out the previous lows. And then obviously our higher highs. This also creates a buy and sell side liquidity, but we will get into that at a later time. Bearish market structure, we start with our high, we have our lower high, our low, and our lower low. Just kind of a trend downwards. As you can see here, right here, we have, I'll mark out this box. Get rid of this. Mark out this box. You can see right here, we have our low, and then we have our first high, and then we have a lower high, and then a higher high, and then a lower high, and then it continues the process upwards until we flip the direction into bearish, which is our high, lower high, lower high, lower high, and then lower low, lower low, lower low, lower low. It's pretty simple to understand. It's just basically whatever direction the market is trending towards, or trending up towards or down towards, is what you can identify the market structure as, when we likely continue in that direction until structure is broken. So just know, obviously, it doesn't always look perfect. Like, it's not always, as I just showed you on the chart, it's not always just boom, 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 or boom, 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 boom. Sometimes you have choppy price action. So start by identifying your major swing points. This is super useful for recognizing the overall trend and structure of the market. Now, we're not trading directly off market structure like you would with like a trend line strategy, but it is key to understanding the higher time frame narrative, and that's really one of the most important things to be able to understand. So, for example, if we're seeing bullish market structure on the weekly, daily, and the 4 hour, and you don't want to be fighting that just because the 1 minute chart shows something else, the higher time frame will always carry more weight than any lower time frame. So if you're like, okay, we're in a bearish trend down on this 1 minute chart, but then you look at the the daily, the weekly, the 4 hour, the 1 hour, whatever it might be, any higher time frame, and then we're trending in the complete opposite direction, maybe you should take a second and, you know, think of your bias, and maybe it might be wrong. So keep that in mind whenever you're trading. Always align with the higher time frame direction first. So now let's have a look at a live example of both bullish and bearish market structure on the chart again. And that right here, as you can see, we'll mark this as green. And then we can have our bearish market structure marked here in red. So bullish market structure, bearish market structure. Super simple stuff. It's going up or it's going down. And you look at the higher time frame because it carries more weight and it makes more sense that the market would continue in either direction depending on the highest time frames, like where the highest time frame is continuing towards. So now we look at market structure shifts, which is basically just like, for example, a market structure shift would be like this, right? We're continuing downwards, continuing downwards, and then we break this high right here. That is a market structure shift because market is now shifted, taken this high, and now continuing the opposite direction. It is the same for the opposite scenario. We have our low, high, higher low, higher high, classic bullish market structure, and then we break this higher low, shifting to bearish structure after the body closure below a higher low. Same thing in the opposite direction. This is a shift to bullish market structure. We have off the bat bearish market structure, high, low, lower low, and then our market structure shift that takes out this higher low. So it is an indication that price wants to then move higher from that shift after a body closure below or above a swing point, which would be a higher high or a higher low. So time, the most important thing. Yes, the futures market is open 23 hours a day, but that does not mean you should be trading 23 hours a day. And I cannot stress that enough. So time is extremely important in the market. If you're not trading during the correct hours, there's no reason for price to be delivering to your targets. Time and price work together hand in hand. So you need to be trading during the correct times, and you should not be trading every single kill zone. There is absolutely no reason to. So you'll notice the fastest price action and the fastest delivery is usually going to be in New York AM session, or NYAM, as a lot of people refer it to. And this is the time I personally trade. I do, however, sometimes trade New York PM or New York lunch, but I trade lunch and PM very rare, and I only trade those two sessions if I do not get a trade in New York AM or we lack delivery in New York AM. So I'll only trade these two scenarios if New York AM is bad or lacks delivery. As you can see right here, you can mark these out in your journal. These are it's not the exact session times, but it is where you will see the most delivery happening and the biggest amount of, I guess, the liquidity in the markets towards these times. And that is every single session. I've marked those times. So write them down, remember them, put them on your chart, write them on a sticky note, whatever you got to do. So these are also known as macro times. If you look at those, macro times are where price will either seek liquidity or rebalance price. It is basically the first 10 minutes and the last 10 minutes of every single hourly candle. We are creating the open low or the open high, and it is going to be giving you that wick. So it's going to be a lot of volatility going into the first 10 minutes of the hourly candle and the last 10 minutes. I can show y'all this real quick too, so you can look up ICT macro times, and that should show up. Yeah, right here. So Yeah, these are macro times. The first 10 minutes and the last 10 minutes of every hourly candle. So that right there should help you. And you also should let me remove these drawings. You also should put this on your trading view. So this is actually extremely helpful. So that way you don't need to write these down. But if you go to indicators and you look up ICT kill zones and pivot TFO by Trade for Op, that is the best session indicator that you will find, and it shows you all the high and lows of the sessions, the time blocks, what times they are. And yeah, so now finally time for news, which is the most important part. You do not want to be trading certain news events on certain days. You don't want to be trading like 5 minutes before or after news, depending on the news. And news creates data candles. So the minute, if you go on the 1 minute chart on a news candle, let's say we have news at 9 a.m., you look at that 9 a.m. chart, it's likely going to introduce a lot of liquidity to the market. So it's going to be an abnormally large candle compared to the rest of the candles that you've had previously. We create a candle like this. Obviously, this is a bullish candle. You can also definitely have a bearish news candle, but you have the news candle. It still has an open, high, low, close, just like the rest of every single candle. But you can use these data highs and data lows, or the high and the low of the candle, to target for your trades, because it introduces a lot of liquidity to the market, meaning that we likely need to trade back and take out that liquidity into the market. So you're going to be wanting to know when bank holidays, orange and red folder news is. I use Forex Factory. It's completely free. I also send this out every single Sunday in my Discord, the entire news calendar. Um, I usually, unless it's good, I usually only forward test no news Mondays, just because from experience, I've noticed that they're not the best they're not the best days to trade for my strategy. My win rate slightly drops. So my job in the market is to, preserve my capital. So that is exactly what I'm going to be doing. And that's why I usually only forward test no news Mondays. So high impact news is usually good PA. We'll go over Forex Factory. It's just forexfactory.com. You're going to go down here and you'll notice you just see a lot of just a lot of news, right? So what you're going to do is go over to filters and just press none, click on USD. You don't need to know any white folder or yellow folder, because orange and red are the only things that you need to stay away. So you can see that this upcoming week, right now it is Saturday, so you know, um, that is why there's not a lot on here. It usually will update on Sunday for the rest of the week. But you can see Wednesday we have 1 p.m. news, 7:30 red and orange folder, and then Friday we have tentative, 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 which is mean it's kind of like an all-day thing. You don't know exactly when. And then 9 a.m. we have prelim. Oh, I've actually never even seen this news before, but yeah, that is Forex Factory. If you want to look it up yourself, feel free. If you don't want to look it up yourself, I post it in the Discord every single week. So that So that wraps up our video for today. Our next episode, we are going to be going more in depth. I believe I'll probably make this a 5 to 7 series beginner boot camp. And then I'll go more in depth into like the real sauce after this. So yeah, like, subscribe, and stick around for the next video. Peace out, y'all.